a new video of IPO analysis. Today we will be reviewing the IPO of Paras Defence and Space Technologies Limited. We'll start with the company's background, then we'll talk about the key highlights, financial performance, issue details, objectives of the IPO, and in the end, our recommendation. I'm Fundamental Research Analyst Siddhi Acharya, and I welcome you all to our YouTube channel, Choice. Paras Defence and Space Technologies is engaged in designing, manufacturing and testing of various defense and space engineering products and services. It caters to four major segments in the Indian defense sector, which includes defense and space optics, defense electronic, electromagnetic pulse protection solutions and heavy engineering. Paras Defence is the sole Indian supplier of critical imaging components such as large-size optics and diffractive gratings for space application in India. The company has a range of 34 different categories of high-quality products and solutions which are manufactured at the two facilities in Nerul and Ambernath in Maharashtra. Further, to meet the growing demand of their customers and enhance their product portfolio, the company is in the process of expanding their manufacturing facilities in Nerul and Ambernath. The company is also expanding into new opportunistic areas like unmanned aircraft systems. Through its subsidiary, it aims to provide UAV integration services and solutions to a wide range of applications like agriculture, power transmission, oil and gas, mining and construction, etc. Its customer base includes companies like Bharat Dynamics, Bharat Electronics, Hindustan Aeronautics, among others. The company's financial performance is not much encouraging, as during the years FY18 to FY21, the company's top line degrew by 1.3% CAGR. However, the company's earnings fell by 14.4% CAGR. EBITDA margins during the years remained between the range of 26 to 30%. Business from heavy engineering increased by 2% CAGR, while business from defense electronics and defense and space optics decreased by 3.5% and 0.5% CAGR respectively. Financial liabilities increased by 15.6% CAGR. However, the debt to equity ratio decreased from 0.6 in FY18 to 0.5 in FY21. The company has priced its IPO at a price band of 165 to 175 rupees. There will be 85 shares in one lot, and at the higher price band, the total application money is 14,875 rupees. The IPO opens on 21st of September and closes on 23rd September. The company is planning to raise 170 crores through this IPO. Out of this, 140 crores will be through fresh issue and 30 crores will be through offer for sale. The company will not receive any amount from offer for sale, and of the net proceeds from the fresh issue, 34.7 crores will be used for purchasing machinery and equipment. 60 crores will be used for funding the working capital requirements of the company, and 12 crores will be used for repaying the debts. Considering the product profile, the company does not have any peers in the listed space, and at the higher price band, the company is demanding a PE multiple of 43x to its FY21 EPS of Rs 4. Considering its niche product profile, dominant market positioning and vast growth potential, we would recommend our investors to subscribe for this IPO. If you liked our video, please click on the like button and do subscribe to our channel to never miss an update on the upcoming IPOs. Thank you for watching, and I will see you in the next video.